Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is our good friend Jeffrey Tucker. He is the founder and president of the Brownstone Institute. He is a former editorial director of the American Institute for Economic Research and the author of The Market Loved You, Why You Should Love It Back. Welcome back, Jeffrey.
It's good to be here. Thank you.
Yeah, it's always a pleasure having you on. I think the biggest question, Jeffrey, is have we made it through the worst of the banking crisis, or does common sense eventually kick in and say no? Where are we at, Jeffrey?
There are a couple of metrics out there that are bugging me that hardly anybody talks about. The number one thing is the accelerating rate of decline of the money supply. Now, here you have to understand this is it's a little difficult. So we don't have any data to draw on. We have to go back to 1929 to 1932 to understand what this is about. But even in that case, we didn't have the acceleration in the rate of money creation that we had in the late 20s that we saw in 2020 and 21.
Mhm.
So, as you recall, the rate of inflation, I should say the rate of monetary expansion peaked at 26% in 2020. And then it's the rate of increase has been falling ever since. But then ever since the Fed really got into the advanced stage of this dramatic increases in rates, we've seen an actual sucking of money out of the macroeconomic environment. I mean, it's
Mhm.
actually a falling money supply, which is only possible under very rare conditions. Like I say, we've never actually seen anything like this before. So it's some degree of speculation about what this would look like. And I really did hit the books and kind of went back to the great masters of this. And I can't find anyone who says something other than what it is in broad terms is a reversal of the increase. So all the boom times that we saw in 2020 and 2021, hardly anybody would actually call the boom times. But if you wanted to call them that, is going to be decelerating and
Right.
reversing itself, which implies that every single sector is going to be hit. That would imply that we've only begun to see the scaling back in media and technology and the big corporations. We're going to see more firings and that sort of thing, and then ever more pressure from the banks, which heavily loaded up on cash
Right.
during those years, and then are find themselves with these cockamamie portfolios filled with assets that aren't really assets anymore,
Mhm.
thanks to the Fed's actions. So most likely, we're going to see a greater degree of centralization in banking. But I'm concerned too about labor markets and industrial productivity generally. In fact, I have to say that, and again, this we're all speculating here, right? I
Right.
mean,
Right.
we've never actually been here before. We don't have any historical comparisons to go by.
Mhm.
So, one possible scenario, for example, is that the decline just mitigates the increase and it all washes out. And nobody cares. That's the theory that money is neutral. And now maybe that's what you could invent a model by
Right.
plugging in money's neutral to everything else and it goes away. I actually don't believe that. I don't think it was neutral going up, and I don't think it's going to be neutral going down. So, and I don't think it's a coincidence that the most recent numbers we have concerning productivity is showing that we're already in statistical recession. It just so happens we choose GDP to observe that rather than GDI, which is really just the other side. It's gross domestic income
Right.
versus gross domestic product. And under GDI, we've already been through 2 quarters of substantial decline. I had predicted a month ago that by the middle of the summer, the recession would be obvious to everybody. And so far, that prediction seems right.
Well, you look at Europe, they find the Eurozone, they finally declared a recession.
Yeah,
Germany last week, 2 weeks ago, they finally declared a recession.
right.
In the US, the definition keeps changing.
Yeah.
So why do you think that is?
Well, because nobody.
Uh,
In America today seems insane to the rest of the world. I mean, we
yeah,
seem to be a great export to the world as lies. That seems to be the the rule of the day in public
right.
life in America today. Yeah, I'm concerned about this because and you look at labor productivity, and we haven't really talked about that, but my friend David Stockman is all over labor productivity. He thinks that that's the thing you need to be looking at.
Mm-hmm.
And he shows really we have never seen declines this dramatic on record, really in the post-war period, so long as we've been able to calculate this particular piece of data. So it looks to me like, and we're not going to be able to play these games of like, well, it's 2 quarters, but that's only in a statistical sense. It's not really recession because look at the unemployment rate. We're not going to be able to play those games come fall, and certainly by the winter, it's going to be undeniable to everybody. And this country is so stupid and so delusionary,
Right.
deluded that people are going to be flying into panic despite all the warnings, despite all the signs, despite everything. People are still going to be in a state of freak out in about 6 to 8 months,
Mm-hmm.
wondering what to do. And what's extraordinary to me about this is I don't know
What?
if you saw this, but this man called Joseph Biden, who says he's president, had an op-ed today in the Wall Street Journal,
Mm-hmm.
crowing about the historic, the great American recovery, the great American jobs boom. And this article was so bad.
Wow.
I saw there were 1,500 comments on the article last time I looked, and I looked through as many as I possibly could, given my time constraints. I didn't see a single one that wasn't making fun, that wasn't laughing, that wasn't denouncing him, asking him, what was his search query to Chat GPT to get him to write this. So it was so bad. But he had one very interesting remark in there. It's kind of a clever. I didn't take it apart from my Epoch Times article today because it's just too boring to go point by point. But he does have one interesting remark. He said we've had the strongest recovery of any major economy. Well, I looked at what he meant by major, and it's not clear what he means by major. But I started kind of digging through the international data on just GDP growth from the OECD over the last 4 years. And I have to say, I was not entirely aware of just how deep the recession, the loss of productivity was during lockdown years in the US as compared to most of the rest of the world. I
Really?
hadn't, I hadn't really understood that. Like Korea and Indonesia and many other countries, say nothing of Sweden, but most countries and in France it wasn't that bad. Italy was really terrible. But basically the harder you lock down, the more you deliberately destroyed your macroeconomic environment. And the US was one of the worst in the world.
Wow.
And so, he's talking about the strongest recovery of any major economy. Okay, let's just pretend like that's true, and I can't actually verify that. The depression, the forced depression of the lockdown was deeper than most every other economy in the world, which I hadn't actually realized. I'm gonna do some more empirical work on that and see if I can follow up on this. But the U.S. really screwed itself over
Yeah.
in epic ways.
And a lot of people now are saying that the contagion from the banking crisis will even spread to the commercial real estate,
Mm.
or it will even spread to other
Yeah,
sectors. How
yeah.
bad will that be if, let's say, it hits the commercial real estate and then it starts hitting other sectors? And then what does the Fed do? How do they do to, like, hypothetically, what do they do to recover that? Or is that just end game?
Fed always tries to do something. I mean, they just
Right.
never do nothing, which is probably what they should do. Don't do anything should be the rule for the Fed, but they'll always do something. The big problem is going to be in the cities
Right.
and New York, and obviously Chicago, San Francisco is a catastrophe, but it's in the big northeastern cities, Boston. The commercial real estate is going to be declining, and you notice that the great bring back the jobs to the office movement has completely stalled. That's
Right.
at an end.
Yeah.
People are like, screw you, I'm not coming back. So you're still at half capacity in most large cities in this country. What an astonishing thing for people around the world to hear.
Yeah.
I have to say, I was on a television show in the UAE a
Mm-hmm.
couple of days ago, and a lot of these people are very interested in business conditions in America because they have They have supply chains to service. They have family members. They have people who have immigrated here, or their
Right.
families moving here. They're wondering about business, and I just kind of laid it out as best I possibly could, which is that it seems to me that U.S. is on the verge of a kind of a microeconomic. That's not the right word, but it's a small business boom in America. I think that's going to be. I think that's the best next big thing because the large companies got so bloated
Yeah.
over the last 15 years. They're servicing so many high labor costs right now, and they have only just begun to cut. The other thing is that their supply chains were all wrecked during the lockdown years in a way in which these small businesses weren't. That have really reliable supply chains. They rely on family connections, people
Hmm.
they know, trusted people, sort of the tribal economy. I don't know what else to use it, but people and the customers you serve in these small areas are actually doing extremely well. And if you look at a price patterns over the last year, small businesses way ahead of the big box retailers
Interesting.
in terms of being able to adapt to changing economic conditions. So in a sense, that's the one area of American business that I'm actually really optimistic about it. Like if you're willing to work and you're really into enterprise and entrepreneurial and extremely clever, and you're putting family members to work and you're calling
Yeah.
on friends of friends and that sort of thing, and you're serving local markets, you're going to be doing just fine. But on the rest, I think we've just begun to see the declines. So they
Absolutely.
were very interested in this because that actually is the market that
Hmm.
their listeners are most interested in. They don't worry about the oil aspect of things. They figure that the more the Biden administration puts up windmills and relies on sunbeams to provide American energy, the higher the demand for oil is going to go. So not worried about that, but
Oh, that's
but
hilarious.
but they are interested in business conditions, and there I think the small business has got a real future in this country.
Yeah, absolutely. And Jeffrey, we are Wall Street Silver, so I have to always ask you about gold and silver and where you think it's going. We just talked about for the past 10 minutes, instability in the markets, sectors could go down. Where do you find safety? And do you think gold will go a lot higher as this recession gets turned on?
Well, that's the beauty of gold and silver both is that they tend to be resilient regardless of market conditions, and that's
Right.
been true for thousands of years. And I assume that as the chaos intensifies over the summer, the fall, and the winter, and people start panicking and wondering where to put their money, that it's going to, that role of being the safe haven is going to become ever more attractive
Hmm.
over the next year. I'm just that's just my outlook on things. I
Right.
especially now that you have uh, this sort of ham-handed attempts by the Fed to walk us slowly into central bank digital currencies. I mean, I'm telling you, people hate these things. They hate them
Yeah. Yeah,
and
absolutely.
and ever more suspicious of digital media and this kind of stuff. So gold ownership itself, I think, is going to be very attractive. That's always been true. By the way, I thought some years ago that Bitcoin and cryptocurrency would replace gold as the leading safe haven,
Right.
but that didn't work out well because of, I mean, my analysis of this, which will tell everybody where I stand on this issue, is that Bitcoin totally ruined its possibilities in 2015 when they refused to scale the thing. And so it was immediately like that demand
Right.
for instant clearing and digital moving of small amounts of money and that sort of thing was replaced with normal new clearing systems with fiat currency, and Bitcoin just lost its popular appeal. Which I think is one of the great tragedies of our time. But as part of that, I think that what that's done is prolonged the life of gold and silver as safe haven metals.
Absolutely, I agree. Well, Jeffrey, it's such a huge pleasure having you come down to Wall Street Silver. And hopefully, as the market develops in the next couple of months, and as we keep an eye on the Fed and see what their next move is, we can have you back on to discuss it.
I'd like to. Always appreciate being on
Yeah,
the show. Thank you.
huge pleasure. Talk to you soon.
Bye bye.